Crypto markets are green today, but the real question is not whether Bitcoin bounced, but whether this is the start of a durable bottom or simply a relief rally after one of the weakest weeks of the year. Tuesday, June 9th, 2026. Like and subscribe for daily market updates. Today's agenda, the current reality, market snapshot. What changed today, last week context, is the bottom in Analyst Views, is now the time, 72-hour watch list, closing summary, fact check. Now let's look at the specific price levels and what they mean for investors. Crypto markets are green today, but the real question is not merely whether Bitcoin bounced, but whether this is the start of a durable bottom or simply a relief rally after one of the weakest weeks of the year. Bitcoin is back in the $63,000 area, and Ethereum is trading near $1,690. Solana and XRP are also higher, but under the surface, the market is still deeply divided. Short sellers were forced out. Ethereum ETF flows improved, and strategy returned to buying Bitcoin. At the same time, Bitcoin ETF flows remain negative. Investor mood is still in extreme fear, and US yields are still high. So today, the correct conclusion is not that everything is fixed. The correct conclusion is that the market is attempting to stabilize, but the bottom is not yet confirmed. We need to look closely at what is driving these price moves to understand if they are sustainable or just temporary. Now let's break down exactly what changed in the last 24 hours to cause this move. Today, the crypto tape looks better. Bitcoin is trading around $63.4 thousand, up roughly 1.5% on the day. Ethereum is around $1,690, up more than 2.5%. Solana is near $67, and XRP is around $1.17. The total crypto market capitalization is around $2.26 trillion, up about 1.1% in the last 24 hours. That is the green part of the story. But the context matters. This bounce comes after Bitcoin briefly traded below $60,000 last week, its weakest area since late 2024. It also comes after a heavy wave of ETF selling, forced liquidations, and capital rotation away from Bitcoin toward AI, semiconductor, and IPO-related trades. The most important level is still the $60,000 area. Holding that level helped create the rebound. But a real trend reversal would need more. Bitcoin would need to hold above support, reclaim higher resistance zones, and show that the rebound is being supported by fresh spot demand, not only by short covering. Investors need to watch these levels closely to see if the recovery is real. Now let's look at the broader context from last week and last year. 3 things changed from yesterday to today. First, positioning improved. CoinDesk reported that the move towards $63,700 triggered large short liquidations. That means part of the rally was mechanical. Traders who were betting against the market were forced to buy back positions. This can produce a sharp green candle, but it does not automatically prove that long-term buyers are back. Second, the ETF picture became more nuanced. Bitcoin ETF flows are still weak. Farside shows a $91.4 million Bitcoin ETF outflow on 8 June, after a $325.7 million outflow on 5 June. That is not a clean institutional buy signal, but Ethereum ETFs showed a stronger print, with an $82.4 million inflow on 8 June. That creates an important divergence. Bitcoin ETF demand is still fragile, while Ethereum is showing short-term relative strength. Third, strategy returned to buying. The company bought 1,550 Bitcoin for about $101 million and now holds 845,256 Bitcoin. This helps psychology because the market had been unsettled by strategy selling a small amount earlier. But this should be framed correctly. Strategy buying is a positive headline. It is not enough by itself to offset broad ETF outflows or macro pressure. Now let's discuss whether the bottom is actually in or if more risks remain. The last week was the real stress test. Bitcoin had fallen sharply, Ethereum was also under pressure, and investor mood moved into extreme fear. Alternative, Me now shows the crypto fear and greed index at 10, compared with 8 yesterday and 23 last week. In normal language, that means the bounce has not yet repaired investor psychology. The one-year picture is also important. CoinGecko shows the total crypto market capitalization is still down more than 36% from 1 year ago. Bitcoin dominance is about 56%. Stablecoins now represent almost $314 billion in market capitalization, or about 13.9% of the entire crypto market. That stablecoin number matters. It is both a warning and an opportunity. It is a warning because investors are still defensive and sitting in cash-like assets, but it is also dry powder. If Bitcoin confirms a stronger recovery, some of that capital can rotate back into risk. Until that rotation actually happens, it remains potential demand, not confirmed demand. Investors need to understand that the market is still in a fragile state. Now let's look at what other analysts are watching and what they think. The honest answer is not confirmed. This looks more like a bottoming attempt than a confirmed bottom. The positive on prices case is clear. Bitcoin held the $60,000 area. The market bounced. Short sellers were squeezed. Ethereum ETF flows improved. Strategy returned to buying. Investor mood is extremely negative, and extreme fear can sometimes appear near attractive long-term entry zones, but the negative on prices case is still active. Bitcoin ETF flows remain negative. The market is still recovering from heavy selling. The US 10-year Treasury yield is around 4.56%, which keeps real-world yields attractive and makes high-beta assets less compelling. Reuters also reported that capital has been rotating away from Bitcoin and toward AI, semiconductors, and major IPO stories. That is important because Bitcoin is not just fighting its own chart. It is competing for investor attention and available cash in the market, so the bottom checklist is incomplete. For a cleaner confirmation, investors would want to see Bitcoin hold above 60,000, reclaim and hold higher resistance, ETF flows turn consistently positive, the dollar and yield stop rising, and the fear and greed index move out of extreme fear without price breaking down again. Now let's discuss if now is the time to buy and how to manage risk. The analyst community is split, and that is exactly what we should expect near a possible turning point. Some analysts argue that holding the $60,000 area and reclaiming the 200-week moving average zone is constructive. Others warn that ETF flows show institutions are still selling into strength, not aggressively buying the dip. The more balanced interpretation is this: the market can rally further from oversold conditions, but a sustainable bull phase needs confirmation from flows, available cash in the market, and macro. A short squeeze can move price quickly. A real bottom needs better demand quality. There is also a competition for capital issue. Reuters has highlighted that money has been moving toward AI, semiconductor stocks, and large IPO stories. That does not mean Bitcoin cannot recover. It means Bitcoin needs a stronger narrative and stronger flows to compete with other high-growth trades. Investors should not ignore these competing stories, as they can distract capital from crypto. Now let's look at the 72-hour watch list and what to monitor next. This is not personal financial advice, but from a market structure perspective, the answer is, this is not an all-in signal. It is a zone where disciplined investors may start building or adding exposure gradually, but only with clear risk management. A more conservative investor would wait for confirmation, sustained ETF inflows, Bitcoin holding above key levels, lower yields, a softer dollar, and less forced liquidation risk. A more aggressive investor might use the extreme fear environment for staged entries, but should accept that another test of support is still possible. The key mistake would be to treat one green day as proof that everything will go up. The better approach is scenario-based. If Bitcoin holds 60,000 and ETF flows stabilize, the recovery case improves. If Bitcoin loses 60,000 again while ETF outflows continue, the market could retest lower levels quickly. Investors need to be patient and wait for the right signals before committing large amounts of capital. Now let's summarize the key points and what investors should do next. Over the next 72 hours, the most important signals are Bitcoin holding or losing $60,000, whether Bitcoin ETF flows turn positive for more than one day, whether Ethereum ETF inflows continue, whether the fear and greed index moves above extreme fear, whether the US 10-year yield stays near 4.56% or moves lower, and whether stablecoin capital starts rotating back into Bitcoin and Ethereum. For altcoins, the rule is simple. If Bitcoin holds support and Ethereum leads, quality altcoins can bounce. If Bitcoin fails, altcoins usually fall harder. This is still a Bitcoin-led available cash in the market, even when individual altcoins show short-term strength. Investors need to watch these metrics closely to understand the market direction. If the macro environment improves, the outlook for crypto will become much brighter. But if the yields stay high and the dollar remains strong, the recovery will be difficult. Follow us for more updates on the market. Today, crypto is green, but the market has not earned an all-clear signal. Bitcoin has stabilized around $63,000. Ethereum is showing relative strength. Strategy buying helps psychology. Short sellers were squeezed. Stablecoins show dry powder on the sidelines, but Bitcoin ETF flows remain negative. Investor mood is still in extreme fear, and macro conditions are not yet easy. The most accurate conclusion is that crypto is attempting to bottom. It has not yet confirmed that the bottom is in. For investors, the practical message is discipline. Do not chase green candles blindly. Watch flows, yields, Bitcoin support, and Ethereum relative strength. If those improve together, the bottom case becomes stronger. If they do not, this remains a relief bounce inside a still fragile market. Investors should remain cautious and wait for better confirmation before making major moves. Thank you for watching and stay tuned for more updates. The script above intentionally uses only the most important data points for an 8-minute video. Sources checked on 9 June 2026. Bitcoin and Ethereum levels verified against Web Finance market data. Bitcoin $63,500, Ethereum $1,690. Market cap dominance. Stablecoins verified against CoinGecko global market cap charts. Market cap $2.26 trillion. Bitcoin dominance 56.17%. Stablecoins $313 billion/13.86%. Solana and XRP levels verified against CoinMarketCap. Live crypto market overview. Fear and greed index verified against alternative. Me. Now 10, yesterday 8, last week 23. Bitcoin ETF flows verified against Farsight investors. $325.7 million on 5 Jun, $91.4 million on 8 Jun. Ethereum ETF divergence verified against Farsight investors, plus $82.4 million on 8 Jun. Strategy purchase verified against CoinDesk. Strategy bought 1,550 Bitcoin for about $101 million and holds 845,256 Bitcoin. Capital rotation headwind verified against Reuters. Investors shifting attention toward AI, semiconductors, and megacap IPO stories. U.S. 10-year yield verified against Trading Economics. U.S. 10-Y yield around 4.56%, updated 9 June 2026. Short squeeze verified against CoinDesk and investors. Calm, rebound was supported by short liquidations. Editorial judgment, the bottom is not confirmed. The strongest positive signals are price stabilization above $60,000, Ethereum ETF inflow strength, strategy buying and stablecoin dry powder. The strongest negative signals are Bitcoin ETF outflows, extreme fear, and high U.S. yields. Therefore, the report frames the move as a bottoming attempt/relief bounce, not a confirmed trend reversal. Today, crypto is green, but the market has not earned an all-clear signal. Bitcoin has stabilized around $63,000. Ethereum is showing relative strength. Strategy buying helps psychology. Short sellers were squeezed. Stablecoins show dry powder on the sidelines, but Bitcoin ETF flows remain negative. Investor mood is still in extreme fear, and macro conditions are not yet easy. The most accurate conclusion is that crypto is attempting to bottom. It has not yet confirmed that the bottom is in. For investors, the practical message is discipline. Do not chase green candles blindly. Watch flows, yields, Bitcoin support, and Ethereum relative strength. If those improve together, the bottom case becomes stronger. If they do not, this remains a relief bounce inside a still fragile market. Thanks for watching Market Pulse Daily.